bring you the biggest voices from the East in our in the new edition of our ongoing series, Asian Tigers. To start off with, Udain Mukherjee caught up with Hugh Young, the managing director of Aberdeen Asset Management Asia in Singapore. He began by asking if the pace of the recent market rally came as a surprise to him.
It was a surprise, and of course for people like us it's a bit too much too quickly, really. We never like prices to run away from us. We're the rather peculiar types of investors who like prices falling, and that then gives us the opportunity to buy good things at cheaper and cheaper prices. But yes, it's been an astonishing rally start to the year. Maybe putting it in context and looking back more broadly at emerging markets as a whole, they have been out of favour for a very long time. And suddenly you do see people talking again the inevitable cycles that we have in sentiment about emerging markets being a little more attractive now. And of course, India is one of those big markets that international investors will look to. And of course, there have been strong domestic reasons for India doing well after the demonetization scare. Scare is maybe too strong a word to use, but sort of hiccup is a better word.
But do you really think the tide is turning? Because the last 4 odd years has been difficult for emerging market investors. People were at a point beginning to doubt the whole story. Do you think people are just chasing prices right now because of the momentum, or the kind of interest you're seeing is probably heralding some kind of a midtime turn?
I think it's hard to make that call. There is an element of momentum, certainly. Oh my goodness, markets have turned a bit, they're running, we better get on the bandwagon, and people jump immediately into things like ETFs, for example. For investors like us, we never lost faith in emerging markets, and clearly emerging markets are the long-term place to invest. But they do go through some really sticky periods and cycles, both in an economic sense and in a sentiment sense. And I would argue, economically, things have not been terrible for emerging markets generically for the last 3 or 4 years. Yes, they've been tough for some of the commodity-related markets, but for the likes of India, economically, it's been a good period. What we've seen over that period, however, has been far more to do with sentiment, all the big pictures, elements going on, what's going on in the US, QE, and we had Ben Bernanke marking really the top of emerging markets, what, 3-4 years ago now, in May of whichever year. Which saw emerging markets peak and money coming out of emerging markets. So I think it's inevitable that money will go back into emerging markets.
But through what kind of vehicles, Hugh? Because sometimes that tells you more about whether it's chasing momentum or longer term. This time around, is it ETF kind of momentum money, or are you guys getting money as well?
We're not getting much money in the door. It seems to be more from ETF money moving quickly back into markets. We certainly saw probably best part of 3 years of redemptions, and that certainly slowed down substantially. That was the overall switch away from emerging markets. Not a call on India itself, more a call on emerging markets generally, and that's certainly come to a grinding halt, the outflow, but we haven't seen dramatic inflows back into our funds.
Do you think that would be consistent with other India dedicated funds or country specific funds too?
I would suspect so, and unless you're running ETFs, of course, which tend to be far more reflective of the broad top-down calls. As you know, we're very bottom-up, fundamental, and we can be very different from indices, and at times people just want to buy the index. We think India's going up, therefore buy, or we think emerging markets are going up, therefore we buy MSCI.
How do you read this global rally? Do you think it's sustainable, or do you think an air pocket is coming soon, given how fast we have moved and the kind of valuations we are trading at now?
Oh, well, my trouble is I'm getting to such an age where one always gets more and more conservative and worried about the world.
Yeah.
And it's very hard in many ways to be totally optimistic about what's going on in the world. What with what's happening in the US,
Yeah.
politics, and certainly overall we're not seeing a sharp pickup in global growth. So that makes many years now that the world economy has been not quite stagnant, but very, very quiet. And that certainly continues. Whereas asset markets, particularly stock markets on the whole, particularly the US of course, have been remarkably strong, almost diverging from the real world.
What's the biggest risk after such a rally globally? What do you think is the biggest possible roadblock for the market now?
Well, these are the risks that we can never really predict, but the big risk is, of course, interest rates going up, reversal of QE, money being sucked back out of markets, maybe. In some senses, we're all expecting that to happen, so one.
Okay, well.